Hello folks, in this video you will hear about the 5 sectors bullish from here and the story behind it. What started with one of the worst crashes in Indian stock market history in March 2020 ended with an unprecedented revival by the time the curtains came down on financial year 2021. Always the biggest fear for the investors is what if markets go down and you don't get the investments back? In such a scenario, how to hedge your asset classes? Let me introduce you to the capital guarantee solution provided by the Policy Bazaar, which provides a 100% capital guarantee to investors. These are unit-linked insurance plans, ULIPs, that offer the benefit of insurance cum investment. Nowadays, customers are apprehensive about purchasing ULIPs due to high stock market volatility. Capital Guarantee Solution Plan is specifically created where the investor's principal can remain safe, and a portion of the principal is invested in the market to earn a profitable return. The key features are, in Capital Guarantee Plan, your capital is the investment made, which is 100% safe. Capital Guarantee Solution guarantees that the customer will get back the premium invested upon completion of the policy term. Get upside of market-linked returns with zero risk to capital. Better returns when compared to FD and debt mutual funds. Principal amount will be safe no matter what. Tax benefits under Section 80C. Lifetime cover is 120 times the monthly premium and you get it from day one.
The minimum premium is 2,500 rupees.
Maturity amount is tax-free under Section 10(10)(d). Please read the description carefully for more details and use the link to invest in a capital guarantee plan.
I'm Dr. Krish. Welcome to our channel KrisDom Investor. Here you get timely, quality and unbiased opinion on the stocks and investment opportunities. The expectation from global organizations like the International Monetary Fund (IMF) at the start of financial year 2021 was emerging markets would be the worst hit due to the pandemic. But the stock market and the economic recovery in India has so far poured cold water over these predictions. Morgan Stanley, in a recent report, advised investors to increase allocations to emerging markets. Among emerging markets, Morgan Stanley is most bullish on India, expecting it to outpace other emerging markets in financial year 2022. Advised investors to increase allocations to emerging markets. However, growth expectations are varied. The World Bank said India's real GDP growth in financial year 2021 could range between 7.5 to 12.5%, against the government's estimates of 11%. Let's see the 5 sectors. Number 1. Steel sector. Steel makers expected to perform well in this financial year. In April 2020, the price of industrial commodities like iron, steel and copper tanked. By August, with lockdown restrictions loosening, the price of these metals rebounded. This continued in the second half of the financial year 2021 as the manufacturing sector's demand was higher than the first half of the 2021, pushing the price of Tata Steel, JSW Steel and Hindustan Copper higher. This was helped by declining Chinese supply in January 2021. China is the largest producer of steel with 60% of global production. The drop in Chinese supply was because factories were closed due to Lunar New Year celebrations in early 2021. In March 2021, domestic steel prices began to moderate. This was due to domestic miners like NMDC reducing the price of iron ore. As the price of steel drops, rising economic activity will drive demand from infrastructure, housing and auto OEMs, which will rise due to the government spending impetus on affordable housing and infrastructure. Brokerages and rating agencies expect steelmakers to benefit from rising demand. This is why credit rating agency Moody's upgraded its outlook on Tata Steel to stable from negative. CLSA maintained a buy on Tata Steel and upgraded its rating to outperform on JSW Steel. And Motilal Oswal maintained a buy on Steel Authority of India, SAIL. In my opinion, the top companies which get benefited from this sector are SAIL, Tata Steel, JSW Steel and Welspun Corp. Theme number 2. Infrastructure sector. In April 2020, the output of India's 8 core industries coal, crude oil, natural gas, petroleum, fertilizer, steel, cement and electricity declined 38% year on year due to capacity restrictions. By September, core sector's output recovered, but a 2% year on year contraction remained. Analysts suggested this revival was due to increasing gross value added as costs decreased. This is when India Ratings revised its rating on infrastructure sector to improving, citing an expansion in orders. In Q3, the government boosted new infrastructure projects by allocating an additional rupees 6,000 crores to the National Investment and Infrastructure Fund (NIIF), supporting the centre's national infrastructure pipeline projects. The top companies which get benefited from this sector: Adani Ports and Logistics, Container Corporation of India, Cochin Shipyard, and Ashoka Buildcon. Theme number 3: Auto sector, especially OEM segment. In Q2, automobile original equipment manufacturers (OEMs) wholesales rose. According to the Society of Indian Automobile Manufacturers, in August, auto OEMs reported wholesales growth for the first time in financial year 2021. The wholesale numbers jumped in Q3 as the festive season boosted retail dispatches of passenger vehicles and two-wheelers. However, in November, inventory was piling up as retail sales were low, and the Federation of Automobile Dealers Association of India urged auto OEMs to decrease production. In November, the government approved a production-linked incentive (PLI) scheme worth rupees 60,000 crores for automobile OEMs. This was the first step to make India an automobile manufacturing hub, said Minister of Road Transport and Highways Nitin Gadkari. Heading into financial year 2022, ICRA expects the sector to grow by 22 to 25% year-on-year due to resurgent consumer sentiments and increasing rural income. The top companies which get benefited from this sector: Tata Motors, Hero MotoCorp, and Ashok Leyland. Theme number 4: Technical textiles, especially man-made fiber and specialty yarns. Global reports estimate that the market for the technical textiles may stand at $27 billion by 2027. The current Indian technical textiles market is estimated at $19 billion, growing at a CAGR of 12% in the past 5 years. It contributes about 0.7% to India's GDP and accounts for approximately 13% of India's total textile and apparel market. PLI scheme for textile sector gave a major boost for man-made fiber and specialty yarns. However, most of the exporters in this segment are currently unlisted on stock exchanges. The new trend seen in this segment is the launch of antiviral fabrics, and government is yet to regularize this segment. Popular companies such as SRF, Grasim, Page Industries, Arvind Fashions, Vardhaman are ticking upwards day by day. In my opinion, the top companies which get benefited from this theme are SRF, Grasim, and Indorama Synthetics. Theme number 5: Pharma sector. Here, pharmaceuticals PLI rally still has some steam left. The pharmaceutical sector, which enjoyed a dream run in financial year 2021, will receive another boost in financial year 2022 thanks to the PLI scheme. In November, the government approved rupees 20,000 crore to promote domestic production of bulk drugs and active pharmaceutical ingredients, that is APIs. Even before the scheme was approved, the Indian pharmaceutical industry was growing fast. In the 10 months ended October 2020, pharmaceuticals companies' exports grew 18% year-on-year to rupees 80,000 crore. This pushed the Nifty Pharma Index by 62% between April to October 2020, while the benchmark Nifty gained 40% in the time. Since the scheme was announced, several listed pharmaceutical companies have applied for it, including Sun Pharmaceuticals, Cadila Healthcare, Lupin, Dr. Reddy's Laboratories, IPCA Laboratories, and Alembic Pharmaceuticals. However, only 2 listed companies have been approved under the scheme so far: Aurobindo Pharma and Aarti Drugs. While the rally in pharma stocks cooled off in Q4, the outlook for the financial year 2022 remains strong. Chinese authorities, in a bid to control pollution, closed chemical factories. These factories served the China's pharmaceutical sector. This de-risking away from China will further improve the standing of Indian pharmaceuticals. In my opinion, the top companies which get benefited from this sector are Aurobindo Pharma, Natco Pharma, and Aarti Drugs. Please do let me know in the comment section your opinion on which one among these sectors may produce more multi-baggers. I will post a list of potential multi-baggers on my members only wall. Please click the join button and enroll. Thanks for watching. Don't forget to like the video and subscribe to the channel for more exciting videos. I will see you again in the next video. Until then, take care of yourself and your investments.
Friends, if you want a model portfolio with my early stage multi-bagger stock ideas, please join as a half-yearly member using Front Page app. Link is given in the description. use discount code KrisDom010 to get a 10% discount. Most of the senior follower members doubled their portfolio returns in the last 6 months.